the immediate effect is essentially on people who earn in rupees and have to spend in foreign currency, especially the dollar. Can anything be done to help them, or is it just bad luck? Especially 2 or 3 categories of people we should talk about. One is, of course, students who are aiming to study abroad. Many of them take loans, educational loans. But remember, those loans are disbursed in rupee, but they're spending in a foreign currency. What can they do to sort of reduce the impact of currency fluctuation? The other category is people who want to travel abroad, either for business or for leisure. If they're planning this a few months down the line, what are the steps they can take now? To speak about some of these issues, I'm joined today by Nisreen Mamaji, the CEO of MoneyWorks Financial Services, and Hasan, CEO of applycourses.com. Welcome to both of you, and thank you so much for speaking with us this evening on the India Development Debate. Nisreen, let me begin just by your overview of what this situation is doing and the impact it has on people who, like I mentioned, essentially have to earn in rupees but spend in dollars.
A very difficult time for parents of aspiring students who are planning to go to say the US, Canada, and Australia, because this has severely impacted their entire budgeting program. Now, the child could be either an existing student or a fresh student. Now, if you're an existing student, who's already settled into the system, the parent would have to pay for the tuition fees, which is of course compulsory, as well as for accommodation, travel, food, etc. So for a student who's already been there for 1 or 2 years, it's possible for him or her to take a part-time employment and subsidize the parents' costs towards, the additional expenses, because they would by that time perhaps not be living in the dormitory and could have moved out to a shared accommodation. So if the shared accommodation is smaller, then maybe they can go for something which is a little larger and more children sharing or more students sharing to bring down the cost of the rental, and also take on, say, a part-time, job, which as students, it is allowed in their visa program. Now, for the new students, it becomes a little difficult because the parents might have started planning, say, about 4 to 5 years back, when the dollar rate was about 68 rupees to a dollar. And currently, you're looking at nearly 80. So there's a depreciation of 12 rupees. So say for a $25,000 per year program, already you're down about, 2.5 lakh rupees. So if you are a parent who has taken a loan initially, what you can do is, you can take a top-up loan, either from your own banker, to the extent that your collateral is not being utilized. So you have to check your maximum eligibility and go back to what your collateral is and maybe extend that. Or you can take another loan from the same banker or from a NBFC or another bank to the extent of the shortfall. So all these measures.
Nisreen, if you take more loans, just to get some clarity there, if you take more loans, isn't your entire cost going to jump up even higher because you have to service those loans eventually?
Of course. So that, of course, I mean, but if your child is already got the admission, either you defer the admission and hope for a lower, rate next year.
Yes.
Or you take a friendly loan, say a family member or a close relative who would perhaps, waive the interest part of it completely, or, you'll be able to service that part of the loan at a later date. So those are some friendly options. But if you don't have that, then what can you do? I mean, you dip into, the funds that you have saved for another goal. So you might have a retirement plan that you might want to encash a little earlier, or say another child's education that you've been saving for, you can borrow from that. So either, you work around your own financial plan to create some immediate liquidity, because your child is going to go in August or September. So the first term fees will have to be paid and you're already in July. So either you do that, or you take on the second loan, or a bridge loan is also a possibility, where the educational, the bank, the same bank or another NBFC is willing to give you a bridge loan. So you have to have ensured that the first loan is at a variable rate of interest, which is pegged to inflation. Otherwise, if you're on a fixed rate, there also you will be facing a negative impact.
Right. Mr. Hasan, I just want to understand what is the kind of advice you're giving families and students who are trying to go abroad, are people deferring their decision because of the rupee, or are you not seeing that big an impact as of now?
Basically, when any students wish to go abroad, of course, they take at least 3 4 months or 1 year before they plan. So, uh, having a difference. So when somebody moves to abroad, they this 2 lakhs difference doesn't make impact on their life unless they are from a middle class family and lower middle class who totally rely on education loan. Now, of course, if this is a situation happening, like students who wish to go to US are actually switching to other countries because of this money problem. They keep on rising because there are countries where the students can pay in installment as well. For example, in case of UK, when you start, you don't need to pay the upfront amount, full fee. You just need to pay 40 50% of the tuition fee. After visa, once you reach there, you need to pay in monthly wise. So in that case, even in Germany, there are universities you can pay in monthly. So in this way, they could save or they get a buffer time to save that money. But I would suggest if somebody who has already taken admissions and they have no other way, they either they have two options. If that they could take look for some scholarships within the universities. It's quite hard, but they have to keep on looking because sometime university comes up with a scholarship that will save their that money what they are actually looking. Or there in US universities they give a grant based on income of the family, so they have to apply to the universities and look for some grants that will maybe cover up that expenses which they're going to spend more on because of this currency conversion. And at last, I think the best way is to, if nothing goes happening as per what they want, as soon as they reach there, they should start doing some part-time job, so that will cover up and earn some that extra money, so it will not be a burden on the family.
Okay, so those are definitely options, but one question which people have been asking, and Mr. Hasan, if you could advise on this, if there is an option of whether to pay the fees upfront or on a quarterly basis, which one makes more sense? Because people don't know if it's going to get worse. It might not stop at 80. There are some estimates that the rupee could go beyond 80 to 81, 85, or even more. Would it make sense to make the bulk of the payments then upfront, where you know what the price is, or hold on and make your payments in a graded fashion so that you don't have the entire hit at one go?
Of course, in case of US, it's been 1 year. The rupees, it's going high. Like it's a huge amount of fluctuation is there. So I don't know even whether this will continue or it will go down. But if I was as a student, I would have paid the full fees. If I had no other choice of making installment, I would have paid the full fees. I would have looked for some scholarship within the university, and also after reaching there, I will look for some part-time
If you
jobs.
have a choice, what makes more sense? What are you suggesting or recommending to people?
If somebody who hasn't decided and has not applied till now, I would recommend them to apply to universities which has an options to pay in installment, or go to countries where the rupees is strong, quite stronger than going to US.
Which is,
I might add over
what are
here.
those
Like for
countries?
example, the UK is students can go to UK.
Okay.
They only need to pay 40% of the tuition fee. After visa, they can work part time, and then they can pay in semester wise as well. In the Europe also, their fees is less. Of course, when there are a lot of factors matter when a student decide to study abroad.
Of course.
They look for world rank universities. They look for scholarships. So they are based on their preferences. But if somebody who has money concern in terms, then we suggest them that you might need to change your destination if that 2 lakhs or 3 lakhs will be a burden on you.
Yeah. Nisreen, I want to come to you on that point. If there is a choice between an upfront payment, would it make more sense to, bite the bullet and make all those payments at this rate? Or should you wait hoping that things will ease off?
So basically, some of the banks also release the money at one time. So they've already given you the liquidity when you have applied for the loan. In that case, since you already have it, I think that you should just go ahead and continue, making the lump sum payment in the beginning, for fear that the dollar will slide further. At least move it to the child's bank account in the international country, even if you don't have to pay the, university. So that once you've converted at, say, rupees 80, then, you don't have the stress that it could be going to 82 or 84. So that's if you have that liquidity and if the entire loan is available to you in dollar terms right now. Okay, and then of course you have the your hassle of having to bridge that 2 to 3 lakh difference, which is what the difference eventually works out to for a $25,000 loan. But I would agree with Mr. Hasan here that for most of the parents who have planned their child to go to US, Canada, or Australia are typically from the higher income group, and so this difference may not make too much of a the dollar rate fluctuation will not make too much of a difference to them. Now, when it comes to the aspiring student from a middle class family, partly they can also fund through scholarships within our country, either from a trust or a private institution or from a corporate. And mostly they would have planned that, last year itself when they were applying and giving their, entrance exams, etc. Because even this amount would be a very formidable amount for them. Because I regularly advise students and parents for children's education plans. So I am aware that the loan part and the scholarship part is typically planned a little earlier. So now the difference is about 2 to 3 lakh rupees, which can be managed by the parent himself or herself right at the time when the child is going. Because also the fact is that the tickets are much more expensive right now this year compared to the earlier years because of this oil prices. So there are a lot of issues that the parent has to start funding. Besides the tuition fees, the accommodation, the food, and even the ticket costs, everything is on the higher side. So it is right time, definitely. But I would think, to answer your question, is it's better to do a lump sum if you have the liquidity. If you don't, then you have to force take the risk of the dollar swinging even more, rupee depreciating.
So far we've been talking about a scenario where students may be traveling very, very shortly in August, September, and what do they do now? And assuming that they've already planned. Now let's broaden that horizon a bit to people who are making their plans today for applications next year. Let me also broaden this to include travelers who perhaps want to travel internationally in the next 5 to 6 months. What should they start doing today? Should they start accumulating dollars at this rate today? Are there any kind of investments they can make which will give them some kind of buffer? Nisreen, that question for you.
So right now, unfortunately, the international, funds, the mutual funds, because of a SEBI regulation having reached the maximum limit, those are not available for subscription at this point. But for the students who had planned this earlier, or for travelers who had planned this earlier, they would already this is definitely what we recommend, international funds to hedge against the currency depreciation. But this planning has to be done in advance, because currently that option is not open to you because of a SEBI regulation that we've already breached the maximum foreign currency reserve for this particular corpus. So therefore, I think that for a student or a person who's planning to travel right now, you should factor in the additional cost, right from today, even a further depreciation, and then work backwards and do your planning and see if it is possible for you to travel in 6 months, or then defer it to a year so that you have enough time to plan for that additional cost.
Does it make sense to purchase the currency in a graded fashion until then, so that you have an average, Nisreen?
Yes, of course, you can do that, on the Forex cards or the, international cards. You can start accumulating, slowly by slowly. So as and when you have the liquidity, and so that, by the time you are, ready to travel, you have that X amount that you had hoped for.
Mr. Hasan, yes. Your advice, Mr. Hasan, to people who are now planning for next year or going forward, should they be looking at destinations and courses on these criteria, on whether they have payment facilities, whether there is an option to work as well, and what is the opportunity as far as scholarships are concerned?
Yeah, definitely, because that's how the UK market has come up recently, because a lot of students are going abroad and when they're choosing when we are getting the inquiries, right, we check their requirements. So fees is one of the cost is one of the factor which always change their decision based on the what fees they will be paying. So I would suggest, of course, they should choose many alternative destinations, study destinations, and compare which currency would make a difference in their tuition fee. Like whether 2 lakhs, 3 lakhs will be a problem for them, then of course they should not choose those destinations. And if they think, okay, I can go to anywhere, no issues, then they can go to any countries. But also at the same time, as I said, when you choose the country, you should look for whether it will allow you to work part-time or not, whether it will help you to pay in installment or not, or whether you will be getting a lot of scholarship, because there are some universities giving scholarship up to £3,000, £4,000, or around 1 to 2 lakhs easily based on their merits. So they should look for the scholarship first. That should be the first criteria while shortlisting the universities as well as the country. So whatever the extra money they will be paying during their because of this conversion, they could save that in return from getting a scholarship or a grant from the university.
Absolutely. Thank you so much, Nisreen and Mr. Hasan, for joining us today, and hopefully our viewers will get some clarity and some help from some of the very, very useful tips discussed today. Now,